Is it a catalytic moment to look more broadly or invest more broadly? So again, the narrative has been so much has been confined to these 7 stocks, so much has been confined to these hyperscalers, this particular sector. Is this the moment in which people begin to look more seriously at some of the other sectors and companies that you've been alluding to here, and Lisa pointing out in the last hour, what we've seen in small caps, what we've seen in the Russell 2000 over the last week? An indication to you that that's finally happening, that this catalytic event has happened and people are investing more broadly?
I think the investment is there. I mean, we're seeing it across the board, not just in the AI, and particularly the large cap companies are investing. Whether they're seeing the returns, I think that's where we do want to see that, for us to have a lot of faith in the broadening out. But I will highlight, given valuations, it makes sense for people to say, look, AI might be absolutely transformational for the way business is done a few years from now. It can absolutely increase productivity, but who are the winners? I think given valuations, you might want to diversify who you think might end up winning. And the GPU-TPU fight is ongoing. I don't think anybody knows who the winners are going to be. So I think being diversified, I'm a fixed income person, so I'm going to talk about fixed income. Fixed income playing a role in portfolios. With equity valuations where they are, look at what bonds have done. They don't sound very exciting, but the ag is up 7% this year. Anytime there'll be this wobble, oh, we didn't see enough of that AI earnings, and there's an equity market correction, you'll see bonds work. It's happened this year. I think it's going to continue to happen. So I would say, thinking about the portfolio, your portfolio as a whole, and looking at earnings, looking at all the fundamentals, but making sure you're diversified, you have income somewhere. I think that's the role that bonds play as well. So I'm going to put a plug there for bonds.
Well, I mean, this is a plug that a lot of people are making, especially if they think that maybe people are overstating the economic growth. And if the Fed is cutting for the wrong reason, not necessarily the right reason, is that kind of where you sit, that you think that the Fed is going to have to cut a lot more, and you kind of reject the yield curve steepening in a way and think people are overestimating how much growth can really continue?
So, you can have growth, but you need not have the job growth. Remember the jobless recovery in the early 2000s? I sort of wonder about that. If you're going to get this big productivity boom, if every other company is deciding to invest in AI, do they cut back on hiring? Because of all the razor focus, sharp, everyone's looking at margins. If I don't want my margins to compress, maybe I'm going to keep hiring low. I am concerned about the labor market. I mean, we're looking at bottom-up, top-down analysis. And the one thing that doesn't make sense is, why is the labor market this weak? And it could be the productivity boom that everyone's expecting, and so I don't need to hire. And so, to your question about the Fed, I think they still have a couple of cuts. Exactly, I know Chair Powell said we're in the realm of neutral. There are only 4 Fed officials who think that neutral is above 3.5, which is where we are now. So I do think they're going to cut. We see 2 states of the world. One where they cut gradually, maybe 1 this year, 1 next year, 2 this, next year, to try and get to that neutral if inflation starts getting closer to that 2%. And then there's the scenario where now the labor market continues to weaken, and you can still have okay growth and an unemployment rate at 5%. That's concerning. That's that non-linear weakening in the labor market typically precedes a recession. Then I think you see this Fed, irrespective of the Fed chair, I think they're all unified on this point. If the labor market is clearly weak, the Fed's cutting a lot more than what's priced in or what's in the dot plot.